Okay, great. Good morning, everyone. Good afternoon, wherever you may be. Thanks for joining. We're going to jump right in since I've got a nice little 45-minute slice to be with you. So today's topic, more than mean reversion, trading with RSI patterns. And before we get to the fun stuff, obviously, I need to remind you, like all my other colleagues today, that trading can be risky business. So the key point from this nice write-up here is it is your responsibility to evaluate any information, opinion, advice, or other content contained within. So I'm just going to have my question box ready here. I'm going to kind of be moving at a fast clip. If you have questions, throw them in. If I don't see them at the moment, I'll try to get them towards the end. But with that, let's take a look at today's menu. All right. So it's trade giving, etc. So I am all about laying this out for you and keeping you focused so that you have stamina all day. First, we're going to do a quick review of RSI power zones. Could you throw an R for RSI in the room if you know what RSI power zones are because you've been to my other presentation? Who's familiar or not? But we'll make sure we go through the basics so that everybody knows what this indicator is and how it works. Then we'll move to what is mean reversion. Now, again, it's a concept and a theory, but if I'm telling you that there's more to the RSI than mean reversion trades, I want to make sure you know what mean reversion is. From there, we're going to power zones entry signal that I have not shared yet en masse like this. I did preview it to a select group of my subscribers earlier this week, and I'll tell you more about that later. And then, of course, a stop placement strategy for it, because we're going to talk entry, you better talk stop. Now, with all of that, we're started with a review of RSI power zones. So those of you who've seen my work before, you know that I use a lot of analogies and colorful things to help explain the important concepts in the market. And since it's Thanksgiving, I made sure that I started off with the analogy that ties right into the American tradition of Thanksgiving football. So in the American football layout, in case anyone's not familiar, you got the ball centered in the middle of the field to start, and you've got two teams on either side trying to get to their end zones, you see labeled here. So I come from a Green Bay Packers household. My husband's from Wisconsin. So the Green Bay Packers football team is, been around for forever, very notable history and all. And they've got a lot of rivals. So one of their biggest rivals is the Chicago Bears. Now, these two teams are any two football teams, college, high school, doesn't matter, playing. They're on opposing fields, and they've got to get through the other team in order to make their points and win the game. So the Bears, the Bears are defending, and the Packers have to get through them again to be in the end zone to score points, whether it's a field goal or an actual touchdown. Same thing for the Bears. They've got to work their way across the field and get through the Packers to get to their end. All right. So again, this is taking a sports analogy to help you understand why you've probably been using RSI not to its full potential and how we're going to fix that today. So let's take this whole football field, which as you can see with the arrow on the left, is about 100 yards, right? I don't think that counts the end zones, but we're going to cheat a little, and we're going to stretch the 0 to 100 to cover the entire field, including the end zones. And we're going to take what you see here and plop it down in a chart, okay? So now we've got a momentum indicator, which is the relative strength index, which is what RSI stands for. And the traditional way that it was put out into the world by Wells Wilder back in the late 70s was with a standard 14-period setting. It's very important. Any of you who are new in here, it's really important to know that the standard 14-period setting is not changing, okay? We are not messing with that. We are going to look at the areas between the 0 and the 100 a little bit differently, okay? So your first note to put down, again, if you're new to this, is that relative strength index, which is in any standard software package or on a free chart set up like Yahoo or stock charts. We are not messing with the 14 periods. So if you're looking at a daily chart, for example, this E-mini S&P continuous chart, the E-mini S&P 500 futures is like my baby, okay? I started learning about the market of that from my late father when I was a teenager, and then after college, he trained me on technical analysis and trading. So I've been watching this market and writing analysis about it. They call it Skinny on the Mini, on and off for 15 years. And now that's something I do every single day. So I'm very familiar with the progression of the E-mini chart, but this concept works on any chart on any time frame, okay, as long as it's an active liquid market. So let's just quickly review the standard settings for the RSI, and then I'll give you the power zone settings. So the standard traditional approach is that when the RSI moves up above 70, so it lives between 0 and 100, okay? It doesn't go beyond those bounds. If it goes above 70 and starts to turn lower, so on TradeStation, which is my charting software of choice, you can see that the default setup is that it turns red and comes back down. When this happens in the RSI, this is generally a sign that the market is overbought. It's like run out of buyers, basically, and that sell signals start to emerge. So that's the zone in which sell signals live, okay, and the traditional approach. Just on the flip side, if you're declining and you fall below 30 and come up from there, then with the buy signals emerging, the blue lines here, those are opportunities where the indicator is telling you the market's oversold. Okay, so the standard approach is 14-period setting. That part we're keeping, but overbought is 70, oversold is 30. The thing is, when it comes to using only the standard overbought, oversold approach to the RSI, we're going to call BS on that, guys. All right, there's so much more to this. Now, at the same time that Wells Wilder put this RSI indicator out into the world, as you might imagine, even though there weren't computers, in full access and stuff yet, a lot of technicians, a lot of market analysts started studying this indicator. And Andrew Cardwell and a team of other analysts realized that the RSI does more than just come back down from 70 and rise up from 30. How do I know this? I learned about it when studying to become a professional technical analyst, getting what's called a CMT designation. So I took the concept that I learned about in my readings and I translated it into a visual, which you'll see shortly, but then everything in the rest of this presentation, the entry signals, the stop, etc., that's all derived from my study of this for 15 years, okay? So let's take the football analogy one more time. Remember the Bears, all right? The Bears have to get through the Packers to get to their end zone to score. And just like the Chicago Bears, the market bears, right, who are trying to get prices lower, keep pressure downwards, they don't live in this whole 0 to 100 range of the RSI. The market bears actually very often tend to find resistance between 55 and 65, which I call the bear resistance power zone. Okay, this is the part, guys, where if you haven't heard about power zones yet, you may want to jot these numbers down, although you see them on the screens repeatedly. But this is what you'll need to look for your own RSI in order to follow this concept. So 55 to 65 is the bear resistance power zone. 20 to 30 is the bear support power zone. So what this is saying is that a bear trend or a downward pressured market is not going to get as overbought as a neutral or, of course, a bull market. Okay, it's going to live between these two red spots, these two zones. And just like that, on the flip side, we've got the bulls and their zones. And again, as you might imagine, if the bears are living in the lower part of the chart, the bulls tend to live in the upper part of the RSI chart. So the bull resistance power zone is 80 to 90. What this means is that you now forget this whole business of going above 70 and then just waiting around for a sell signal. You instead, if you're in a bull market, a series of higher highs and higher lows in price, then you're waiting for the RSI to get even more extended to the upside, ideally into the 80 to 90 area, and then fall off. Do you guys see here how at least 2 times on this continuous ES chart, that was the better move in terms of waiting for an overbought condition? Otherwise, if you're looking at a move above 70 and waiting for a top, you're just sitting and waiting instead of making money on the upside. So the bull resistance power zone is 80 to 90, and the bull support power zone is 40 to 50. Okay. So any questions so far? Because this was the setting the table of the menu. All right, just making sure that we all understand what the RSI power zones mean, how it's different from the standard RSI, and what the settings are. All right, so taking that concept and putting it to the side, you'll see the RSI power zones indicator as I use it going forward in pretty much every chart in this presentation. And you'll see that what I did is instead of using shading, I actually drew red and green lines because I still want my focus to be on what the RSI is doing. So for me, just a little vertical line to create the boundaries was more helpful than shading. And I put this together and I started watching the market that way. Again, we're just studying to become a technician super early on, and then eventually programmed it and turned it into an indicator on a variety of platforms. So we've covered RSI power zones, and everybody now has the same basis of what this indicator is. So let's move on to making sure we're all on the same page about mean reversion. So here's price versus time, and then the RSI indicator on the bottom. We're not changing the 14 periods. I cannot emphasize that enough. Should you decide that you would like to change the 14 periods to something else, you've got to test it out. Don't take the rules that I give you and apply them. Also, I will say this, the RSI Power Zones approach works on any chart that has a time frame to it, so minutes, days, hours, etc. On a tick chart, because by definition it doesn't have equal intervals of time necessarily, I would not approach this concept. So if you trade tick charts, what you should do is refer to a higher time frame chart, like a 5-minute chart or whatever minute or hour chart you're comfortable with, and see if your RSI signals emerge there. Then use that to shape your tick chart trading. Okay, so in terms of price and RSI, how they move, the momentum generally moves with the price. So here we go. We've got a series of price action, and these specifics are not that important here because, again, I'm trying to make sure we all are on the same page about mean reversion. In this situation, when you look at all these prices, a person who is applying the mean reversion theory will say, well, if you're going to take trades off the RSI, then the only ones that are really going to be useful are the ones that bring the stock back to the average price. Because mean reversion is taking the mathematical term mean, which is the same as average, and we're saying that stocks, any market in general, just kind of returns back to its average price over time. Okay? This is part of why other indicators and other non-momentum indicators work too, okay, like Bollinger Bands or stochastics or MACD. So the concept is out there and it has validity. The challenge is that when you limit yourself to only applying mean reversion theory, then you're only looking for overbought and oversold signals in the RSI. You're not making the most of it. So one way that people, most traders, kind of generate this idea of mean reversion to see where the market should put out to is by applying moving averages to their charts. So just throw an M in the room for me if you use moving averages on your charts, whether it's to just get an idea of the trend, whether it's to actually make trades, because this is the most commonly used approach to ascertain what the mean reversion should be. So let's look at an example of Apple on a daily chart. And let's look at the pullbacks to the simple 50-day moving average. So in this situation, this thick purple line is the past 50 days average of then plotted on that day. And it keeps rolling forward. So you keep dropping off the first of the 50 days and then adding on a new 50-day. And in a couple of these situations, you can see price extended higher, move back to the 50-day moving average, and in some cases drop lower because it's not necessarily going to be an even thing. You know, you could throw a 100-day moving average on here or a 200-day. I'm just trying to make sure we're all understanding what mean reversion is, again, before we not limit ourselves to it. Up here as well, you can see you got extended with the price, pulled far away, and all it did was kind of move back and trade near it. Happens again over and over and over in this uptrend, probably also in the past experiences of the downtrend. But here's the thing, guys. Look at the RSI power zones on the bottom, okay? So now you can see how I use the RSI power zones. They are drawn a little bit differently. So here I've got these lines, right, that I said that I use instead of the zones of shading. And so the red lines indicate the bear resistance and bear support power zone, and the green lines are the bull support and bull resistance power zone. And the way I have the indicators set up, those numbers are always going to be plotted. You can adjust it on TradeStation to remove them, I guess, but RSI Power Zones indicator is a name, close and 14 period, we are not changing that, and then here's the values. So this is what it looks like. So you can see how it's not just a matter of 70 and 30. We're looking at a lot more here. And every single one of the incidences here of the RSI, of price moving back to the 50-day moving average was also accompanied by RSI Power Zones working off overbought conditions. All they were doing was kind of like unwinding and going back to a base, and then price would surge up again. You can see that now, all right? So if you're only applying mean reversion theory, you have limits. And let's bridge the gap now and see what else we can do. So the application of mean reversion theory only says that divergences are like the only useful thing in RSI power zones, but that's not true. If you bring in a focus of trend following, then RSI power zones offer signals for trading in the direction of the existing or newly formed price trend, right? So we're not limiting ourselves to situations in which price and momentum are diverging and then telling us there's going to be a reversal. We are now bringing in a tool to trade with the trend. And I have super simple breakdown of this, guys, with just a handful of examples so that you can take this and go apply it on your own and see how it works for you. So we're going to stick to the buy side just to keep things simple because, again, I only got another 30 minutes or so here. And we'll use the stop placement for the longs. This tool, the entry and the stops, are the exact opposite for the sell. So you could go look at them for a sell opportunity. So an RSI trend line buy setup, all right? This is to trade with the trend using a momentum oscillator, which is not something we learn about much. The first thing you gotta look for is a price uptrend, either an existing series of higher highs and higher lows, or one that's forming. And I'll show you examples where they are forming, because that's the best time to get in, right? Is after a market has showed that it wants to bottom, but it's still young enough to take advantage of the price move. The second point is that you draw a rising trend line on the RSI indicator. These are not trend lines on price. And you connect the original low to a second higher low, but you only draw this line if it's forming that bull support power zone, 40 to 50. That is the most important thing. We're going to go through examples, but again, these are the steps. Then the third touch of the RSI trend line is what becomes your buy signal. So let's put all of this together. If you want, I welcome you to take like a photo or a screenshot of this if you just want the rules down. I don't have all my copyright stuff and everything on it, so just keep it for your personal reference, but this is everything boiled down to the steps, and we'll go through them in a couple examples. The important thing to remember is that you want price action to confirm the signal. We don't just trade a signal off momentum blindly. Price must confirm what we're seeing with momentum. So let's look back at that same Apple chart. This is a little different segment. But in this situation, we happen to have RSI rising from the bear support power zone. But right now, the price trend is still, right? There's nothing actionable yet. Now, the next day, or the next couple of days, we see the price uptrend forming over about 2 weeks now off that low. Well, you guys are probably wondering, well, what do you see as the price uptrend forming, Hima? How are you ascertaining that, right? Well, look at this break in price above the latest lower swing high of that move off of about $120. So each of these lower highs was maintaining the downtrend. The first time we broke above it, and this is where my expertise in Gann analysis is coming in, where I'm combining the Gann trading signals that accompanied Gann's forecasting methods and using them to help make more momentum. So you break above the most recent lower high, and then the key is that after that, there starts to be the formation of a higher low. This is the sign that this trend is shifting. So this is a price uptrend forming. Okay, that was step one. Now step two was to draw a rising trend line on the RSI lows, but only if the second higher low is forming the bull support zone. So the bull support zone is 40 to 50, and you can see here that there is a second higher low forming there. So we're just going for the big swings. We're not looking at all the little tiny squiggles in between. We're looking at the big swings just like you would for a price trend. So you've got low number one is the anchor. Low number two is the one forming the bull support power zone. You draw a trend line. Now, I happen to draw dotted trend lines on momentum because it psychologically reminds me that a trend line drawn on a momentum indicator is not as important as a trend line drawn on price. On price, I draw solid, thick lines, okay? So that's the only significance of the dotted line. Third touch of this line, if you get it, you won't always get it. You might draw these trend lines and then the market runs away from it, or the market reverses before it becomes a signal. But the third touch of this trend line, with the formation of a low at that line, becomes your buy setup, and you use price to confirm. So using price to confirm can come in a variety of ways. Some people take a hammer or candle pattern that they see, like one here, and they just want to see price break above it the next session. Some other people need more confirmation. They want to see a close above what they think is the new low that's forming, okay? But in this situation, you can see you got a third touch, that's the third arrow, and this is a situation where you would then buy based on your risk reward. And I'm going to show you in a moment a three-pronged stop approach where, depending on your risk reward, you have three different ways to do the stop. Now, in this situation, The RSI continued higher until it reached the bull resistance power zone, which is 80 to 90, the top two green lines. And as you can see, price went up pretty nicely. There was a gap along the way. There was, some corrective bars here and there. But this is super important, guys. Look at how the trend line was the rest of the way. This concept is not saying that this trend line holds and that you keep buying touches to it. That's what you would do with the price trend line. Here, look at how violated this trend line got after the third touch. That's okay because we're not concerned with that. We're only trading the third touch. And what you're seeing here with the trend line then just getting chopped around with the RSI action will happen, but the focus again is on that third touch. And also notice that during this entire period of the RSI getting into the 80 to 90 zone, price was still going higher, guys. This is why I like the RSI power zones approach better than traditional approach, because it keeps you from getting jittery and trying to call market highs or lows too soon. Okay. So you keep staying with the trend until you get a price signal or a new RSI signal that tells you otherwise. So let's take another example, all right? So now I want to show you some variety. So obviously the ES is my baby. I've got to bring my baby into the presentation at some point, but this is a 60-minute chart. And this chart, as you can see, I use like white blocks to cover up the price action and reveal it to you slowly so you can actually learn. This was the actual chart that I published on Monday, October 30th of this year, and it's captured as of 7:56 a.m. So at 7:56 a.m. Eastern, I went to TradeStation, captured the image, put it in my report, and everything I wrote about was based on what was happening up until that moment. So here, there's all this history going on here, but let's look at the most recent price action. We can see RSI rising from the bear support zone. So that just gives us some perspective that even though there's been this downtrend, okay, there's no price uptrend yet, right? But there's been this rally from the deeply oversold level. And look at how this oversold level that recently occurred is similar to the past RSI oversold level. This concept of looking at the recent overbought and oversold levels is also very helpful. See here also, all these oversold readings were kind of close to each other. This happens a lot when you're contained within one market. Now, we need to get a price uptrend forming to have a signal. So here is a situation where you're looking at the hourly chart and there is a price uptrend forming. How's that? Well, you had a rally, which was still within the context of the lower highs at 257725 and 257025. But then you have this formation of higher lows and higher lows starting to emerge. And here's the key, guys. This is what really then makes the power zones useful. Look at all of this price action, okay? From here to here to here. Look at where the RSI is now basing. Okay, it's holding in the bull support power zone. And that's your clue that this might be an uptrend that persists. So this jumped ahead a slide for me, but that's okay. The second thing that we look for to be able to draw this pattern on the RSI is we now have this anchor low, and the next low that's drawable for a trend line, okay? If you went off this first low here, you would already be trading through it. But if this is happening in real time, what you see now is the dotted trend line is more like what you'd actually draw. I don't go back and best fit these. I'm doing these as they would unfold to you. So you have this price trend emerging, then you draw this line, and the most important thing again is that the second higher low is in the 40 to 50 zone. You get a third touch. Now look here, the third touch happened a little bit far away. Okay, that might be. It may not be with oversold, with the RSI being in really low levels or with price being in really low levels. But remember, guys, this is a 60-minute chart. So this 60-minute chart is showing the underbelly of the daily uptrend. And if you're familiar with what's going on with the ES market, then this whole December contract, except for a couple periods of chop and consolidation, has been in an uptrend. So this is your signal to take action, and it's up to you how you want to take action. You can look real close at these most recent price bars. Some people would wait for a break above the most recent high, that little pink line you see there. Some people would just want a break of this high of this doji candle bar. Others might enter as soon as they see this white bar finish, means you get in at the close of this green candle or white candle, which would be a little higher risk, but again, depends on your risk reward. Any way you look at it, this third touch gives you a SPY setup, and it's up to you to use price confirm for your risk reward parameters. And then you got quite a nice move from that. How nice? Well, for any of you who are not familiar with the ES, this price move that came off this signal, this is an $875 move in several hours. You know, it's not like you happen in 5 minutes, but this is what that move would have resulted in if you got in at the low, which I'm not saying you would, and out at the high. But I would think that if $875 is the whole move, you'd be pretty happy if you got 3 or 4 or $500, which would be, you know, which would be 4 or 6 or 8 ticks or something like that. Points, I mean, sorry. So these are my 2 laid out examples to show you the entry, and then we're going to take one of these examples and I'm going to show you the stop. Okay, I'm purposely not showing you a million examples real fast because I want you to take this and go use it. Even on a slow day like this, it's still early. While you have one screen on the Tradegiving webinar, you can still look at how this might be emerging on your markets, on your other screens. So 2 important things, and then we'll move on to the stop strategy. Using RSI trendline entry signals, these are 2 important things to remember. So we are not concerned about the trend line staying intact long after getting the third touch signal. Okay, that was what I was talking about with all the trading around the trend line. It's okay. This is about the third touch. The second point is that 4th or 5th touch signals may occur. So you may have that trend line stay intact and you may see a 4th bounce or 5th bounce, but I'm not telling you to trade those as entry signals. The reason is because usually those are happening when the trend is already very mature and you're maybe in a setup to end up in a bearish divergence, or you're just in not the last, you're not in the healthiest part of the move. Okay, so we're all about the third test of the line. That is it. So the 2 most important things to remember is that the second low, which anchors the trend, which connects the trend line, has to be in the bull support power zone, 40 to 50, and that we're focusing on the third touch for the entry. Now, for actually placing the stops, I try to, again, use analogies of real life things that everybody already knows or should be familiar with to explain my concepts. So I've got this automation spectrum, and I think of it as 3 main ways. Even though it's a spectrum, we're not covering 100 different ways in between. We've got 3 points here. One is one extreme, the other is another extreme, and then one is settles in the middle. So anybody know that movie Airplane from like the 1980s? I grew up watching it and I love it, okay? So just give me an A for Airplane while I get a swig of water if you've seen that movie. Hopefully I'm not the only one. Okay, great, awesome. Jeff, Joseph, Steve, Edward, awesome, good to hear it. So in that movie, they really funnily display the autopilot as this like inflatable pilot who's then manning the plane when the human pilot is taking a break or whatever. In real life, autopilot is not that adorable. I believe it's like a system and you hit a button and it manages itself. But in real life, if you're flying a plane or driving a car, one of these Google vehicles or whatever, there's the option to have the machine you're running operate itself. So if you want to take that autopilot concept and put it to your stops, then for this signal, and for any of the other signals I teach, and I'll tell you more about how to learn those a little bit, the close of the signal bar. So the close of the price bar, which confirms the signal on the RSI, the third touch signal, you take the close of that bar and subtract out 2 times the average range of that bar. And I'll show you what that looks like. Now, average true range is an indicator, again, you can also plop on your chart, and it calculates and it changes generally bar to bar. So you want to take the value on the bar on which you're taking your trade. Now, this requires some math, but no thinking, guys. That's why I call it autopilot. You don't have to make any decisions. You have to just do math and then put your stop in. If you want a little bit more involvement in your trade management, but you don't want to fully be flying on your own, pun intended, then you take the low of the past 20 periods. Okay, so this is all about longs because I taught you an RSI trendline buy. So look back over 20 periods. So if it's an hourly chart, look at 20 bars 20 hours ago. If it's a daily chart, look at 20 trading days ago. And if the low is lower than the signal close, then you can take the low of that bar and just make that your stop. I'm not even telling you to cushion it. Just take that bar and the low and make it your stop, okay? Now, the co-pilot option isn't always available. Why? Because sometimes you might be buying after a long correction down in a market based on the RSI trendline buy. So the price 20 periods ago might have been higher than where you are. So in that situation, you just don't have a choice for co-pilot. Your choices are autopilot or what I'm about to show you now, which you might imagine is pilot, okay? This is where you're fully in control, you're making the decision, and this is how I generally do stops, because with experience, you realize that the best place to put a stop, presuming your account can handle the risk, is the price point at which your signal will be wrong. Why do you want to be out of the market on a trade? You know, do you want to be stopped out because you're using percentage gain trade, or you were just trying to save a certain number of points? No, I'm going to be stopped out. It better be because I'm wrong, because the worst pain I've ever felt when trading or when I was right, but my stop was misplaced, got stopped out, and things whipped around and went back in the other direction. I mean, that was sometimes more painful, especially when I was doing this early on, than actually just having a small winning trade. Okay, so when you're stopped out, it should be because you're wrong, and in this case, that should be because the recent higher swing low has been eradicated. This is the pilot approach where you're fully taking ownership of where the stop goes. So let's go back to one of these examples and go through this slowly, because I know that this can be a lot of information, but I do think I'm giving you something that, again, you could take a screenshot of this, guys, or a photo or whatever for your own reference and apply it with the RSI trendline buy when you see it together, okay? So, Apple, we'll take that same first example again, and let's look at what the autopilot stop would be on that same exact setup that we walked through. Well, I didn't add the HDR to this chart, okay, but I can show you what that would look like. Is if we get a time at the end and I go to live charts, I'll just bring up the ATR indicator. But the ATR on that day that we had this signal was $1.20. So I told you that the formula is to take the ATR and multiply it by 2, which is 240, and then to go to the bar that gave us our signal. So let's say we were really conservative, right? And we only wanted to take this long trade after seeing the latest bar you see here. Well, that bar had a closing price of 116.61. So 116.61 minus 240 tells you where to put your stop. That's it. You just got to do math, but you don't have to think per se. You don't have to make any decisions and stress yourself. You just follow the formula. Well, what does that look like on this chart? Well, roughly, because I drew this on the PowerPoint, but it's still roughly where this blue line is falling. And here's the interesting thing. On this particular trade, it kind of worked out nicely that the stop was still going to be at least below the most recent pivot low that was forming. Okay, this is not the most recent confirmed higher low yet, but based on the price action, it's good. It's a good feeling that your autopilot stop that required no thinking is still falling in a safe area where it's not just that risk of getting gunned or, you know, traded through because of real random volatility. It's a place where if you do trade that low to that blue line, you might rethink your entry and be okay with getting out and reassessing. Okay, so this would be the autopilot approach to this trade. Now, if we wanted to have a little bit more involvement and we went co-pilot, well, we would look 20 periods ago from the signal day. So that would be about a month, because 20 trading days is average of a 30-day month. And we're counting 20 periods ago. We're not looking at a calendar, guys. We're looking on the chart. So count 20 periods back, 20 bars back, and that was 12.16, which I'll show you the actual bar here. The low of the bar was $109.19. Place the stop, that's it. So you can see how you had to do a little bit of work of counting back, but then once you got there, your stop is just where that bar is. Now, would you calculate this and then say that based on your current risk-reward rules and your account size and whatever strategy you're doing, say it's an option strategy about Apple, that this might be too far of a stop? Yeah, well, yeah, it's possible. I'm not telling you that all three of these will apply to you, but I'm giving you the options based on your specific risk tolerance and account size and everything else, okay? So you can see that the 12.16 bar was actually the little tiny bar right after this swing low. So that's where your stop would go. So clearly out of the way if you're getting long where this last bar is. And the pilot stop, well, this is where you just go and you look for the last higher swing low. And hey, it happened to be December 5th of 2016 at $108.25. So technically this pink line actually should just be right at that low. But you could cushion it and put it lower if you want, but I'm giving you an approach where you would just go and put the stop at that low if that's the pilot approach that you're taking, where you have to decide where to put it. So here's what these three look like all together, okay? First, actually, let me answer. I'll put this slide up with all of them and I'll answer some of the questions I see here. Autopilot stop, co-pilot stop, and pilot stop. See how they will generally not fall in the same area. Sometimes they may overlap. Sometimes the pilot stop will be less risky than autopilot or co-pilot. It just depends. But you can see now here that, again, based on whatever options or stock strategy that you're using to approach this market, you now have 3 different ways based on that same entry signal to come in with your stop. And this is all, I work very hard to make this very simple for you to break down. So a couple of questions that you might have. I see some in the room and make sure I answer them. Intraday or swing? This can be used on any time frame, any market, Israel. So I have examples, and I'll talk about my education later, where you can do this intraday, even on like minute charts. How do you find stocks going? So Jamie, well, I would suggest there are a variety of scans you can run, like in TradeStation. I haven't set this up for myself yet, but I know you can run scans for like net percent change, and then you can look at those and see which of those are trending higher. So scanning and finding the stocks where the signals that emerge is a whole separate thing. But I'm just saying, if you have certain markets you trade like religiously, where you're doing options every day, or you're day trading every day, or you're got a retirement portfolio and it's got 20 stocks, well then just go look at those 20 stocks if this has emerged, the signal along the way, okay? So the questions you might have, in addition to the ones I just repeated here, how do you trail the protective stops? Because placing a stop is just step 1. When the market is actually moving up and away from your trade in a good way, how do you trail it and protect the profit? What about entry signals associated with RSI power zones? There's not just this, and there's not just the divergences. There's several more. How do I put this all together from the first steps of making a trade to the last? Well, to put all that together, you can take a second, guys. You can just go to this page and see for yourself. If you go to members.himareddy.com, you will see, excuse me, this is new last week, these little tiles to log into my different services and education. And the one that you see in the bottom, the big black tile that says top trading strategies using RSI power zones, that is officially launching today. It's my newest course, and I'll tell you in a second about what it all has. But I'm just showing you that that's the login page that a person who signs up would access from. So top trading strategies using RSI power zones. I have built the content over the past several months. I have brought in feedback and questions that have come in from RSI Powers users. And what I'm going to do is actually, instead of just putting it in as pre-recorded modules, the first time I share this information, I actually want to teach it all live. So I'm teaching it in a live class this coming Tuesday, November 28th. But this is going to be recorded and put into an on-demand training portal. So if you sign up for this course, you have access to that for life. And you can come live. You'll be invited to the GoToWebinar where I'm teaching this live, but you don't have to, okay? It will be taught live, 2 hours, 3 hours, I don't know, because it's the first time I'm going to teach it all together at once. I've worked on all this and I know all of this separately based on my experience, but I'm teaching it en masse together. And then what we're going to do is 30 days out roughly have a live bonus session, because even if you attend the live webinar on Tuesday and then you have the on-demand recording, you're probably going to have questions. So about 30 days out, we'll have a live webinar that will also be recorded and put into your portal, and you have access for life. And that's for Q&A review, reviewing live tickers, and more. So you will learn how to incorporate, the period for the ATR is also 14 period, Vinny. That's again, the default based on the same period as RSI. Is this going to be recorded? Yes, guys, I believe this is, and a replay will go out from the TradeThirsty team. But the Top Trading Strategies course will have how to incorporate RSI power zones into what I lay out as all 8 phases of the trading process. This includes trend assessment and signal observation out to trade exit and review. And I'll give you specific setups adjustable based on your risk tolerance, just like what you saw today. That's just one little piece of the pie. And I'll also have a takeaway tool of cheat sheets. Now, on that page with the tiles, there was another product here, RSI Power Zones Workshop. That's what I launched in June, and it had cheat sheets in there. That was something I kind of came up with to do after. People really liked them because it was a 8.5 by 11 set of a PDF where you print it out and keep it by your trading desk with a summary of the most important rules that I use. So I'm going to have a different cheat sheet that relates to the Top Trading Strategies course also available. Now, during this 30-day period, we're not going to just have one webinar and another, 3 weeks later. I'm going to show you examples of Power Zones daily. So you'll get 30 days access to the Skinny on the Mini, which has a full member portal built out now. But the most important thing, which I'll still stand by, is that I'll send it to you by email every morning. So you don't have to go digging for it. So starting Monday, you'll get the emails, and what you'll get is daily analysis of the E-mini S&P. Whether you trade that market or not, is a great way to learn the way the RSI Power Zones work and see repeated examples of them in motion. A new thing I've added is that on Mondays and Wednesdays, you also get NQ E-mini NASDAQ 100 futures analysis in the same format as the E-mini, which I'll show you in a second. So again, your access to all this starts when you sign up. You'll get access to the Skinny on the Mini tile on that members page, and you'll be able to go in there and see a bunch of things. But you'll get the emails starting Monday, and those emails and your access will continue through Saturday, December 23rd. So technically your last email will come from me on Friday the 22nd. So here's what a Skinny on the Mini looks like. All right, every report has a chart. It's my chart, just like I showed you in one example. And there's the details of the chart beneath so that you know exactly what time I captured it, what's the time frame. And I always do something that's really important to me. I draw in this vertical line that marks the actual time at which I published the most recent report. And with that, I also have the exact commentary I wrote on the most recent report. This is my accountability to you all. It takes you just a few days then to see if I'm any good at this stuff, because you have prior commentary lined up with when I wrote it. So either the market moved in a way that my analysis was useful for, or it didn't. Then I have a recap, which says what actually happened. This can be a little longer, a little shorter, then an outlook. Again, varies in length, just depends on what's ahead. And I also include key timing points. And I'll give you this nugget for November 30th. That's the key for the ES. So we've got supports, resistance, trend lines, and then all of this in the member portal where you have past 30 days issues of archives and monthly member session archives. You'll also get the RSI Power Zones indicator. So these are all the software that's available for, but TradeStation, NinjaTrader, Thinkorswim, and more. So I see I'm coming up on time here, so I just want to make sure I hear some feedback from you. This last one here, guys, really was great to hear. My first month using RSI Power Zones was also my best trading month so far. And this was from somebody who started using us 3 months ago. So here's your special offer for Tradegiving. So the value of the course is $497. The value of the 30 days of Skinny Access is $97. The Power Zones indicator on its own would be $97. And the Q&A workshop on its own would be $97. But all of this value of over $780 you'll get today for just $297. And you can sign up at himaready.com/holiday. Now, I'll give you this link here again, himaready.com/holiday. You get the course, you get 30 days of my membership, you get the indicator, and you get the bonus session. But you've got to sign up by Wednesday, November 29th as the only catch. And what you get in this course, again, is entry, exit, stop placements. It combines my GAN analysis with this powerful indicator, and it saves you time and money in the long run. So I'll just finish up with a tidbit here that was totally out of left field. I previewed this material on Monday, okay? And on Tuesday, Norman from Ontario told me, a day after learning what I taught you all today, okay? He went and applied it on a 5-minute chart of Tesla, and with that one trade, made enough money to cover the cost of this course. I mean, this was unsolicited. I asked him after the fact, of course, if I can share this. So I thought that was a really interesting thing. So I'm just going to end back on this main page here. Sorry I don't have time to jump to live charts with you, but those of you who sign up, you'll get many opportunities to see me do that, and I appreciate your time. Happy Thanksgiving. Have a great long weekend, and maybe Hubert, if you could just type in that link and appreciate it, because I know you got to move on to the next speaker. So himaready.com/holiday, valid until noon on Wednesday. And you get the course. You can attend live or see the recording, and my membership, as well as the indicator and the Q&A workshop. Okay? Thanks so much.
Thank you, Hima. We typed it in there for you. You're good to go. So it's himaready.com/holiday. And here's how you spell Hima's name. HIMAREDDY.com/holiday.